JB here. Hope everyone's doing outstanding. Thursday, June 12th, 9 a.m. Talk really quick about the market. Some names I'm looking at go from there. S&P futures in the red, although off the lows. They were down over 0.5%, now down about 0.25% after PPI data came in under expectations, kind of adding a fuel to the cooler than expected inflation data we got from yesterday. Um, and then tensions, right? I mean, yesterday, I always talk about the gap. I hate gap days, like especially large gap days, because it always seems like they get sold. And then you worry if they get sold off flat or what have you, then is there going to be follow through or buyers going to be there ready to buy it up? And that was not the case yesterday. We opened 604 and change on the SPY all the way up to 605 by 10 a.m. Chopped around into the afternoon and then some pullback 130 or so. We had a pull and then markets couldn't find a bid into the afternoon. The S&P closed in the red, erasing its three session rally. Who knows the catalyst? I mean, there was import data that came out. I don't think that was it. And then you have geopolitical tensions, right? Iran reports out that the U.S. is trying to pull some of the uh, folks away from some of the areas, and that might be of concern if there's whether it be Israel doing a preemptive attack or what have you. Who knows what that all looks like? I don't know if that was it, but you never know. And then this morning, now the chatter this morning is all about the U.S. dollar, right? U.S. dollar hitting 4-year lows against the euro. Um, Dollar index getting destroyed. Talk about the U.S. dollar losing its reserve status. I mean, these conversations and stories have been out there for years, decades, I would say. Uh, everyone's always talking about the U.S. losing its reserve. Well, at least the U.S. dollar losing its reserve status. Maybe one of these times it comes true, but until it does, to me, it's all just market fodder, right? Clickbait fodder, whatever you want to call it. Uh, but for now, yesterday I I hate consolidation, right? Because consolidation for the market simply means some of these names might not move or rally as much as they might have with some of the market pressuring a little bit. So kind of hate it, but I think for more upside, you take a look where the markets come from, the April lows, and where it has over the last couple of weeks. It's at the upper Bollinger Band, 604 and change on the upper Bollinger Band. So maybe just some chop here again today, and then maybe that sets up to back over 604 in a SPY. So I talked about the start of the week, 597 to 604. I still think that kind of holds true here. If you had asked for all the ingredients for a market rally, you have it, right? The China US deal, pretty much the framework's out there. So that looks like it's set. You also, the cooler than expected inflation data. I was mentioning yesterday afternoon on the rant too, the headlines. Markets are down because the US and China deal includes only a 6-month license for rare earth from China. It's like, I was trying to do the analogy yesterday and I couldn't get it through my head, but it's like, oh, with this deal, China wins and tails, the US loses, right? That's kind of like how the trade deal works. That's how the bears are spinning it. Because like, oh my gosh, China's really getting it over on the US. This is horrible. But meanwhile, if that's the case, then tariffs would go down on China, and that's the big bear case, right? Is oh my gosh, these tariffs are going to put the global economy in recession. So again, they just spin it whatever narrative works for their case, right? To create the fear, uncertainty, and doubt. So I don't think that was an issue, and I think it's just a good thing. And to me, if the global economy is doing well, that means the U.S. economy is doing well as well, right? So all right, that's kind of overall markets. And then I try and look at glass half full, glass half empty scenarios. And I think one of the analysts out this morning talking about the worry about another pullback because the S&P, not enough stocks on the S&P are over their 200-day moving average, which is actually correct. Only 53% of them are over their 50-day moving average. And after the bump at the start of the month, it's kind of been flat. So the thing is, to me, it means there's more upside potential, right? Especially if those start to flip, if that script starts to flip, then there's substantial upside. So that's that. The amount of stock trading over their 50-day moving average is 70. Why do I have? Oh, that's the U.S. dollar index. Is 73%. That hit a high. I think it was like 88% back on May 7th. So that still bodes well. And then this is the U.S. dollar index. And the only reason I pull this up is because I think this is a monthly chart. And everybody, the dollar's trash or whatever. Then you look, it's like, oh, the dollar index is at, multi-year lows. It's not like back 2011, 2012, 2014, 2015, 2000, this is the average on a basket of all the index currencies. So it's just funny that you take a snapshot and you would think that the US dollar is in garbage, right? All-time weak, all-time weakness, and where that's not the case. All right, so that's kind of overall market. So individual names, and yesterday was kind of like a harvest day. So some of the gaps that we had yesterday, there was no follow through. So, Wayfair, a great example, almost near 50 at the open, and then boom, selling pressure came right in. It was down to 48 and change within a flash. Didn't want to see the rest of my profits disappear, so I went and locked the rest of my calls for over 100%. Definitely a name I'll revisit here. I don't know if I'll do it today, but I think it trades over $50 in the coming weeks. And then once it trades over 50, I think it gets some mojo. The thing is, and I was saying it yesterday, it was up 7 sessions in a row. It's above its upper Bollinger Band as well. So some consolidation here is not like a surprising. It's not surprising. It just stinks when you're in the calls because you're patient so long. I have the $50 strikes. The stock's at $42, and then I get the rally, and here we are. Because once you get that rally on inexpensive options, those start to become bigger, and then once you hit the in the money strike, they multiply very quickly. So you like the hold part of the option is always the hardest part. And to me, it's the risk, right? So the risk here is if I don't close them out, we get a pull, those premiums just get destroyed and I lose my profits. But the other risk is that it breaks out. And once it gets over $50, those 50 strikes are going to multiply quickly. So if I had enough conviction that it was going to have follow through, gap and go and run today, I would have held them, but didn't. So definitely a name I'll continue on watch. Same with Lemonade. I didn't want to be in a spot where it's been such a volatile name that I lost my profits. The stock was in the green at the open, but then boom, right out of the gate, it found some pressure. Um, I was actually looking to close the calls out on a Tuesday, so I got another opportunity to close them out. I closed them out, and then I'll definitely revisit. Sure enough, it rallies all the way up near $44 into the afternoon. So, at times I'm kicking myself. I was looking for the June 50s. Do I get those? And I was just sat on my hands. And then sure enough, pulls back into the afternoon, scapping a little lower here in the pre-market. But I think if it could hold up here and, maybe it holds 41 or 40, then I'll look for some more strikes to play for that eventual squeeze over $50. VKTX over $30 in the late morning. Uh, Gained some nice premium on Tuesday, some more premium gain yesterday. So I used the move to close some of my August strikes out for some profits. And then I went and got those July calls because I think it might have the possibility of running up in the next couple of weeks into data. Looked like maybe yesterday was the start. And you look, it was tight Bollinger Band here, set up consolidation since the start of May. So I'll continue to hold those July strikes and the August strikes. If the stock doesn't do much, I'm going to hold both of them. If I get a chance to close some of the Julys out, I will. Joby, great session yesterday, over $10, all the way up to 1028. I think it was 1028, 1020. Yeah, 1028. My calls came back to life. I was saying it yesterday on the Rant. I had my calls up for 100% and they weren't getting filled. So I went and closed them out at 65 instead of 70 cents. So nearly 100%. And then I held the rest. So now I'm riding freebies. It sells off from 1028, closes down to 963, and then sure enough, Cantor Fitzgerald comes out and downgrades the stock, keeps from, I think, outperformed to neutral with $9 price target. I think it would have been trading lower a little bit with the market anyway, but certainly this downgrade doesn't help. If it holds $9, I'll finally look to add some October strikes and continue to hold the Julys. Other names, Reddit, again, it's been one of my favorite names to trade, especially as it gets close to expiration. Traded, looked like it was going to break out in the afternoon yesterday. I think it was over 119, even with the market selling off. And then boom, it's down here at 113. So it's been volatile. Volatility is usually good when the premiums are low into the end of the week because then, if it's 113, you get the 119s for, 20 cents or what have you. Those can turn into serious multi-baggers. So I'll be watching Reddit. I keep talking about SERV Robotics. I finally added some strikes yesterday, and I was looking for decent risk reward strikes, and I was like, do I go out and get the Julys? But for now, I nibbled on some spec June strikes because I think, and you take a look, you can make the case for a bull flag on the chart here. A great story. And I said I'll do a rant. Maybe I'll do a rant just on SERV one time. But back in the day, if Grubhub, I used to be a big Grubhub fan and traded that stock quite a bit. That got acquired by like Eat Now, I forget it was, for like 6.8 or 7 billion. It turned out that got like almost like, I would say written off, but I think they sold it off for $500 million. But that whole space back when I liked Grubhub was competitive. And what it is like some of the big issues, and you don't hear about it much. It's not as prevalent, but back then it was always about this last mile of delivery, right? Not only last mile of delivery for getting food to from restaurants to consumers' homes, but also now you have the products, the Walmart Pluses, the Amazons, right? The Amazon Locker. So all that used to be a big deal, and then now you have Uber catering to a lot of that stuff, right? Most times Uber Eats, and even with Amazon. A lot of times you get an Amazon delivery and you look out and it's not an Amazon truck, it's like someone's vehicle, right? So they're still struggling with this last mile situation. And then in comes Serve Robotics, and Serve Robotics is, I think, it was founded by Postmates CEO, or not Postmates, maybe an engineer or what have you. Then Uber bought them or acquired them or something. Then they spun them off, and then finally went public, right? So it's uh, at the time, I think there were seed investments, and Nvidia was part of it, Uber as well. So at times, Nvidia had like a 10% stake in the company. Uber still, I think, has a 5% stake, and Uber announced a contract or a deal for them to have 2,000 of their robots. So what they do is they're like the last mile delivery, right? They're the Uber Eats, but shorter distances, couple miles. They take their pizza, the McDonald's, the Shake Shack, and then especially in metro areas, be able to deliver to homes, right? Um, so it's just a great story, and it's one of those stories that like the future of delivery. Who would have thought that the Uber Eats and the DoorDashes and Postmates and Grubhub, all that would be prevalent. And then that happened. And now you have the flip side of, okay, now you have the human drivers. So now we already have the robo taxis coming out. Now you have robo deliveries, right? And so I think there's a lot of case uses for it, a huge addressable market, just not even the food, outside the food, prescriptions, food, groceries, um, cosmetics, whatever it is. I think there's a lot more to it than just that. So I think, and they're one of the, lots of patents. They're front and center of this transition. They have a deal also with Wing, and Wing is part of Google's big. I forget what they call it. They have a lot of these initiatives they spent money on to to outside their core business, and Wing is one of those drone deliveries. So Serve has a partnership with them where they'll take the product to one of those Wing outlets, and then the Wing takes it to the consumer. So there's a lot of different levers to pull, and they're still in the early innings, rolling out currently in metro markets. But some of the reason it's trading down here is back in February, what have you. Nvidia updated their stake holdings, and some of these names had run up back last year because all of a sudden Nvidia announced stakes in Soon, SOUN, and then OX, and some of these like outlying names that you never knew they had stakes in, and also in Serve. Uh, so those names went bonkers, but then in February they announced that they had removed the stakes in those companies, and I don't think it had anything to do with the underlying financials or fundamentals, what have you. It was just kind of part of their business, right? So that stock got punished along with some of these other names that probably some of it had been bid up because of those Nvidia stakes. But I think if you look, it's an opportunity. So do I think Serve, and you take a look at their metrics and stuff, they're supposedly going to do $60 to $80 million in revenues in next year. Right now they're doing like 5 million, but they're growing leaps and bounds, 100% on a year over year, a month over month basis, and quarter over quarter. So it's kind of like one of those stories that I could see it trading into the 20s and what have you in the coming months ahead of their really big revenue year next year, which would be like kind of the start of things, right? And not only that, their investments in the robots are eventually pay off in time, right? The cost for these robots eventually get recouped, and then it's just pure profit, right? They don't have the labor side of the things, right? You don't have someone have to drive and all that, pay the benefits and the insurance. And so, I mean, there's a lot of good things. And not only that, they have like $200 million in cash, no debt. So one of these days I'll do another rant on it. It's kind of, I've been looking and digging and then finally pulled the trigger yesterday. So I think it trades north of 15 in the coming week or two. And then don't be surprised I add more strikes. And that's it, folks. We're at 600 here on the SPY. So maybe we get a bounce here. It'd be nice to see a bounce to the green. Again, 597 to 604. If we break under 597 for some reason, whether it be an Iran headline or some other geopolitical situation or shenanigans or some Trump tweet, that 597 is kind of my line in the sand for today and tomorrow. That's where I might look to get some SQQ puts as a hedge or some other hedge position. And that's it, folks. Let's have a great day. I'll be back. Rock and roll.